doing okay. This is Steve Morrow, Beat the Market Maker. This is a recording continuation from last week. So since it's a recording, man, I'm not going to go through all this shit that I normally go through. I'm going to skip the calendar stuff, skip the book stuff, and we're going to get right into charting and pick up where we were last week. So here we go. Pop quiz. Walk me through 1 minute, go. But here's what I'm going to do. It's a recording, man. So stop the tape. Give yourself a couple of minutes. Genuinely try to mark this chart up. Give me the best trade entries. Give me the directional bias and the stuff that you see, and then I'll give you the solution. All right, I'll pause for 5 seconds so you can pause the recording here, and then you just pick up on the next chart. All right, here we are. Here's the chart. What do you see? What are you guys thinking? Okay, you should have this stuff marked in. Take a screenshot of it and meet me on the next page. All right, here we go. This is what we got. High side rejection, right? So if you're boxing it in and drawing on this thing, here's what you need. You need this level marked off. Okay, top of this swing and the bottom of this swing, right? You would take this swing and project it out. Okay. Now you're boxed in. What do you need? You need, we were kind of anticipating a break above, rejection, hook back, failed to take out the buy side. The book is short. Okay, you had a chance to get in here. If you did not take that, you need to take out this low swing. So here we go. Takes out the low swing, hooks back, sell it. There. Right? Hook back, end of day, you're done. Now, going into the next day, what do we got? Okay, this looks like a pretty good anchor from where I come from, right? This is the anchor. You got a high side, flat print, right? Flat print, flat print, flat print, break to the downside. Showing sell side book, downside book. This is what we want. Okay, now how are we going to get in this? Okay, we're going to come out of here in Asia. We got our Asian range, right? What do we need to confirm further downside book? We need a break below an M formation anchor, and we're good. So we come in here, same shit as yesterday. This extends. This is going to be our high swing, right? And this is going to be our low swing. Okay, why? This is the stop hunt. We don't know which way it's going to move off of here, right? We got a stop hunt low, stop hunt high. Okay. Before this prints, when you get this high swing, you draw the box in, and you can be more precise, obviously, right? You're going to cut the M in half. It's at the time you're looking, it doesn't exist. Okay, we have this level from the other day that broke below the flat print. We're thinking that the book is downside here. Your buy should be downside. When they break low to hit the stops and they come back, this is a perfect opportunity to get short on the second leg of this activity because it's leaning on this. Remember, liquidity in the book, drawing the lines. So if and you got a perfect, you split the M in half, you got go, no go, go, no go. This is the go side, pulls back, you can easily take a position somewhere in here. Okay, if you miss that, you got to catch this nadir, box it in, stretch it out. You might have an opportunity there, but you don't get, I didn't see a good clean opportunity for me to get in there. So I did not get this. All right, I took this break, comes back in, pushes below, and hooks it back. We knew this was a level, right? We knew this was a swing level. Price already showed downside bias. It hooks back. It gives you these tight little pins. Get in front of the box, and you got a decent setup. And you picked up from here to here. Had you gotten the top here, I think there was quite a few pips there. There was 149 available. And if you got the secondary entry, there was about 90 on the table for you to take. All right, then what do you expect? It goes in sideways, right? Makes the reversal and ends there. That's what you should have saw. All right, remember, quick move in power is false. Slow, steady move that takes a while to develop, that's the real side of the book. That's what the dealers are doing. This is, I don't know what the right way to say it is, just low volume pushes trying to attract buyers, right? They push higher. What does that do? It attracts people to buy high side, and they buy these dips. anticipating high side, right? Then when they accumulate enough action, they take it away, shift the zone, trap the traders. That's the kind of stuff you got to be thinking. You can't think like a retail trader. You got to think from the back of the screen. What are they doing? A quick move straight up. On a higher time frame, this is 1 or 2 candles, right? On a 1 hour chart, this is 1 or 2 candles outside bar. Then they're trading inside the action. Draw the lines, draw the lines. Flip hook, retest, consolidation, flip hook, sell it, flip hook, sell it, flip hook, sell it, flip hook, sell it. Call it a day. I don't know how greedy you guys got to be, but if you can't catch any of these and you're pissed off chasing it down here, you're in the wrong business. This is the action right here. This whole thing unfolding. How many times since we've been together, right? If you've been here a month or you've been here 10 years hanging out with me, this is the action. This is what you're looking for. Vector outside, sideways print, and then start fading from there. That's it. There's nothing else. And this is a beautiful confirmation. If you were sitting right there and that printed in front of you, you got to take that and just mind your business for the rest of the day. For 2 days, actually. It's perfect. All right, okay. Chart of the day, man. Hope you got it. Hope you've seen it. Hope it's starting to be clear, right? And if you want to bring these levels, look, these levels are transposed. So you bring these levels, this is what you're looking at. When they break above like that and never come back, you could have took a long on the retest in here. Clear it up, you could see it. Right, okay, so it broke above and it threw a couple pins in the low side, and that was a nice vector little move you could have grabbed. Then when you get the flat print and it closes below here, you got to start thinking something's up. So you draw the levels in. Take this low swing. Now you got to look for some type of violation hook back, violation hook back, violation hook back, violation hook back. One more time, violation hook back. Break the low, close below the low, close below the low. Right? If this is push 1 and this is push 2, you're going to get a 50% pullback of the move. Right? From here to here, do the math. It's about 50%. See, this is the kind of stuff I'm talking about, right? You got an L1 push, an L2 push, and then you got intraday a couple of pushes. You can't make this stuff up, man. It's right there every single day for the taking. You just got to learn how to calm down and decipher it. Don't get tunnel vision. All right, so I want to pick up on these emails. We had a bunch of emails in there, and you know, they're a little frustrating for me, honestly. But you know, I got to remember at the end of the day, I'm here to help people. I'm not here to shred people. But some of this stuff is, I don't know. We'll just go through it. All right. So if you remember, I was reading this that the guy passed his FTMO demo. He was excited, and then he went. He paid his money, and he went, and he right out of the gate, he picked up $980. He was moving along, and then the discipline problem came in, right? And I started talking about trade and session degradation, where the most profitable opportunities come in just inside the gray boxes at the beginning, right? Most traders lose track of the count. This is the biggest problem, the L2 pullback, approximately 50% of the entire push 1 and push 2 move. And you'll see it and you start noticing it's common. Problem is, if you're dealing in L2, you got to be aware that you're, right? Let's say he took his first trade L1, right, or push 1 for the day. Then he got the pullback and he got L2 and he chased L2 down into the lows, and then they came back and screwed him up. That's the kind of shit that happens. You might have seen a decent little setup down in here and mistook it for what it was not, a continuation shorter, right? But the whole point of this segment was to explain to you that as the session wears on, the probabilities of the trade diminish, right? And I'll walk you through that on some of the homework charts that we got here. So the question is, what is this guy supposed to do? You guys want to send me some emails about it, your opinion? He lays out a schedule, right? So what he asked me is it possible for you to make me a structured plan, a weekly lesson plan that I must follow, a study plan on how you feel it would best help me to the next level? Okay, look, I don't have a problem with that. It's not a bad idea, but I don't know what's going on in your head. You just asking me for some disciplined plan is bullshit, basically. I don't know where you're lacking and what's going on, but right off the gate, it seems to be some type of self-discipline And I feel like these kind of traits can't be taught, right? You got to lay out a solid plan of execution, which you sent to me, and I thought it was pretty good. And here's some of the things where like you kind of force yourself into discipline. You got to have a PIP goal or a daily take. $1,000 a day for your very first trade out of the gate, you should have been happy and turn that shit off. Right? Once you reach your daily PIP goal, let's say it's $1,000, 20 days a month, that's 20 grand. You'll qualify, you'll take a check. Okay, and the way to do that is to not take more trades, is to scale your lot sizes. Okay, if you're making 1,000 on 10 lots, then on 20 lots you're going to make 2,000, etc. There's a way to scale that. I've said it 100 times about spreadsheets. You have to have a loss limit either in dollars or pips or number of trades, right? So if you have a daily take limit, right? Your take limit was $1,000, you were close enough, $20 off, that's it, you're done. Come back tomorrow at the start of the session when things are fresh and you go again. If you took a hit on the first trade, right, you'd be -1. And -1 should not cost you $1,000. -1 should cost you about $200, $250, depending on how you're risking your money. Now, you take the next trade. If you get hit again, all right, you're on loss 2. That should be $500 in the hole. On trade 3, you either take it down to 750 as a loss, or you go plus 1,000, and now you're plus 500 for the day, and you end it there. Okay, that's it. And if you take 3 stop outs, you're done. And if you take 2 stop outs and a win, you're done. If you take 1 stop out and 1 win, you're done. I don't know how else to say that. That's where the discipline comes in. And this is something I can't teach you. I can't teach you to say, okay, I made money. What is it they say in the market, right? What is it? Sheep get killed and pigs get slaughtered or something like that. It's some stupid saying like that. But that's what happened. You were a pig, a hog. You had $1,000 in your pocket and it wasn't enough. And right out of the gate on your first trade, right out of the box, man, you should have been happy with that. So you have to have as part of your plan. It's one thing, listen, it's one thing to write me some bullshit on paper and say, I'll take 1 trade and stop. It's another thing to do it. You could put that shit in your plan all day long till you're blue in the face. If you don't actually do it, it doesn't mean anything. That's the rub. You can write all this stuff down on paper, but if you don't have the personal self-discipline, what the hell am I going to do 1,000 miles away from you? I could write down, hey, have a loss limit. Hey, have a take, a daily limit take, and then end it. Okay, I've said this 100 times, 1,000 times, probably since you've been in the group 100 times. It's part of the process, man. But you have to understand that you get this tunnel vision that you're on a roll, and the rolls don't work in this business, man. Rolls are for bacon. That's all rolls are good for. You get on a roll in this business and the trade starts to degrade. You start pushing yourself into later in the session and the setups look good and look promising. And if you get tunnel vision and directional bias and you're going the wrong way on a reversal, you're out, you're done. Most people start panicking, can't take the loss because they're up a grand or two and they can't take the $200, $300 hit, and they make things worse on themselves. They lift the stop and they take a $250 loss with a net $750 for the day, and they turn it into a negative $1,000 for the day. And I can't tell you how many times I've seen people do that. I could name 5 guys right now that sent me shit like that, but I will not do that. But I'm just telling you, it's more common than you think. You're not alone. Okay? So part of this discipline and accountability comes from this, right? If you haven't read, and I mean listen to, the 12-Week Year by Brian Moran, this is a great place to start. He talks about accountability right in the book, right? You can hold a baby, but you can't hold yourself accountable, or you can't hold people accountable. The only one that can help you with your struggles is you. But here's the thing, if this was a live class, I wanted to point out that maybe you have some suggestions. So when I get back, I don't know if you guys are aware, but next week, the DMR is on break. So I had some stuff going on and I wanted to make sure that I laid this down for you guys to have something to listen to. So anybody struggling with this problem and they beat it, you want to send me an email and let me know yay or nay if I can share it, and I'll do that. I'll put in, what you did. But I could tell you right now, it's part of disciplines, part of that headbanding stuff to reprogram your subconscious mind to help you understand like greed and sticking to your rules. That's all stuff that can be programmed into your brain. Right? I could tell you that younger guys have a tendency to be more aggressive, and new guys in the beginning have a tendency to be more aggressive. And aggressive is not the answer. Being smart and calculated is the answer in this business. I was young too, man. I did the same bullshit, you know. And for it's mostly guys I'm talking about. Women, for some reason, have way more patience. I literally think it has something to do with age and testosterone levels for guys. Really, it makes you more aggressive and crazy and more. You know, if you read about hormones and balances, and it has something to do with making you more willing to take risks as a younger man. And I think that's why people say, oh, you got to risk it when you're single or when you're young. And I don't mean trading, I mean anything you do in life, business, skydiving, anything, firefighter, whatever. So you got to keep that in the back of your mind that a good, solid plan includes the fact that as the session wears on, the trades degrade. So, you know, I talk about it, I said it last week, I want to say it again, that there's the session starting box, cut that box in half, right? You're going into gap time, look for something to develop here, and then figure out some kind of shadowing where you're about 1/3 to half of the session elapsed. And when that happens, that's it. You're starting to get into degradation. And I'll show you what that looks like on a sideways print in one of these charts. So back to discipline and accountability. The R value has to be a minimum of 2 to 1. I've been talking about this R value and hit rate, and it's amazing. I guess the right word to say is how shitty you can trade and still make money. But the problem is you got to have the discipline to let the winners go to target. And that's the biggest problem for people, right? You got to use some type of trailing stop. I don't know how else to say it, but you got to choke out at the end. And that's something that you either got to have something automatically written for yourself or you got to do it manually, man. You got to have a loss limit in either dollars or pips or number of trades. Okay, right? We talked about this, and Carr made the analogy about you have a gun, you got 3 bullets, you got to take your best 3 shots, right? And really to further on that, you got 3 bullets, but you got 10,000 targets. So you got to pick the best 3 shots that you can take. The best 3 shots come inside the shadow box at the session beginning, and they come in the first crossover of the moving averages, retest back into, look for a box. They come from a zone lining up with opening price and AR numbers, those kind of things. Those are the highest probability trades, right? Implementing a spreadsheet or one of the available money management concepts must be used. You got to manage the money right. It's not just taking entries and hoping for the best. That's not the business. The business has 3 facets. It's entry, managing the trade, and managing the money. And that's it. It's that simple. There's no other way around it. If you're trading stagnant lots and your account's growing, you're cheating yourself, man. Out of thousands of dollars by not using fractional money management. Thousands. And if you've been trading for a while and your account's getting bigger, tens of thousands. If you're trading a challenge account, I don't know if you're allowed to do this or not, but you need to be scaling your lots, man. You can take the same 30 pips 10 times, that's 300 pips, but the 300 pips might return 30,000 on one account and it might return 300,000 on another. It's that powerful. If you're allowed to scale your lots and compound your gains, the numbers become sick really fast. All right. If you're afraid to scale every trade, then you refresh your lot size every week. Every Sunday night, you pull out the spreadsheet and you get a fixed size for the entire week. And then percent allocation, percent risk. If you're trading 1% risk, you bump it up to 1.5% or 2% risk on the same trades, and you'll see a benefit. Okay. Don't use 3bet 50. It's for smaller accounts. If you're trading your cash, 5 grand, 10 grand, and you understand the success rate, you have to watch that. You can't just go, oh, 3bet 50 sounds good, I'll start doing that shit tomorrow. No, you need to watch the webinar on it. Ask me questions about it after you watch everything. The idea is to use borrowed equity. You're borrowing the money that you make from the previous trade to risk. It's kind of like a, I don't know, like a roulette doubling type of thing. But the thing is, you don't use your own money. You need to make the first, you got to have a first win. You got to have a win. Let's say you're starting with 5,000 and you win and you're at whatever the number is, 5,100, then you're using $100 cut into two chances to get to the next level. You understand? You're risking the money that you took from the market, not your personal equity. And there's a formula for that I wrote. It's in there, and it's an amazing concept for smaller accounts. But again, you cannot be using your dinner money or your feed your children back to school clothes money. You can't do that. The money that you use has to be pulled from the market, and it has to be risk capital. And I can't say that enough, man. All right. If you're trading a $200,000 account, do not use any of the bet strategies. Again, I got to say it, they're for smaller accounts. All right. So I got some progress. I love stuff like this. We got a new guy that I don't have permission to use his name, so I won't. He knows who he is, man. He nailed it. My Forex fund. He got qualified, and he has a very, very impressive return on equity, ROE. And he's doing fantastic. He knows who he is. If he's in here, congratulations, brother. Anyway, okay, switching gears. This was a follow-up to a gentleman that wrote me, if you remember, a couple weeks ago. He had a rougher time. So he sent me his results from the 1st through the 5th of August. He had 7 trades, 3 losses, 3 break even, and 1 TP. Okay, so not sure if this means much, but if I held my break-even trades, that would have been 4 wins and 3 losses. Hell yeah, it means something. Okay, a couple of things right off the bat. What do you guys think? Right? Stop. Too conservative would have stopped. Right? I don't know exactly where he broke even. We'll look at his charts and see. But so if he went 1 for 5, then the 3 would have moved over to this column, right? And he would have been 5 and 1 the other way around, or 4 and 1 rather. Sorry, he would have been 4 and 1 because he would have took 3 off of here. That would have left 2, and then add what, 3 to here, so 4 and 2, something like that. 7 trades, 4, 5, 6. You know, I don't know what the hell I'm talking about. This don't add up right, but anyway, you know what I mean. Okay, so here you go. He told me 4 wins and 3 losses. He would have been 4 and 3 if he worked it out. So what's the problem? What causes that? So afraid of losing that you keep yourself from winning. That's the answer to that. I know what? He's so afraid of losing and pulls his stop in too soon, too tight, that he's beating himself out of wins. Okay, so if you got the right directional bias, you're going in the right direction, and this is happening to you, your problem is that you're so afraid to lose, you're cheating yourself out of wins. How do you fix that? Okay, if you go 4 and 3 by making good decisions, and you know your decisions are becoming more sound, then you leave the stop where the stop needs to be and you don't choke it in too soon or move it. So here's an example, right? You get your M, let's say you get your retest here and you're in on second leg, this trade starts moving. There's your stop, right? Trade starts moving. Okay, you're going to get a push like this, and then you might get a pullback into here, and then it finally goes your way. If you leave your stop in place and don't go to break even on this stuff, right? Because this looks like you're on your way, and then you get that pullback where they make a secondary larger M formation, right? Because you get sometimes you get these micro M's, and then 2 pushes, and it pulls all the way back, and it gives you a larger M structure, and then you get in there. So I'm assuming that he put his stop here, he got some action, and then he got taken out, and the trade did what it was supposed to do. Remember, this is a block zone, and that's where you lose sight of things. Yeah, it could trace into here and hit your stop too, but if you're moving your stop to break even, it means that first of all, you're not getting as good a pull as you can. Maybe your pull got in here somewhere, and they're coming back above to hit it. But they're hitting it on a pin and rejecting, and you're not getting a close above. That validates lower price still. So it could be stop distance, where you're entering, and the size of the stop. And when I say size, I mean distance from here to here, right? I mean, ideally, if you had to stop there and left it alone, it would have worked out perfectly because you had a trace into the level. But if you went to break even, they came back and they did exactly what they're supposed to do, trigger the stops that are built up. So how do you fix that? You trail the stop by, you start measuring these distances, right? And you trail the stop by a clearing of that distance. Or you exercise patience until you get a good clear below a swing. Because you know what happens? It makes that swing, comes back, hits it, makes a swing, right? This validates this, all that. This validates this. Then when you get into the last push, or let's say you're going for 30, when price moves to 20, right? You're 10 away and you're up 20. You can go to break even now. Now you start waiting to choke it. When it gets to 25, you go to 21 or 22, and then 26, you choke it up one. 27, you choke it up one. 28, you choke it up one. 29, you choke it up one, and you're either going to hit your limit or get out with 24, 24, 25. That's it. You're going to get plus 25 or plus 30. If you're one tick plus the spread away from getting out, there is no reason why you got to give all this back if it hits a level and comes out of there. That's what a choking stop is. And we don't have an EA written for that for MetaTrader. It doesn't exist anymore. I wrote the code several times. You guys know Joe. He wrote that for me, and he passed away. And he's the only one that had the source code. So you got to do it manually. And the other thing, too, is they constantly change the code in MetaTrader to keep that kind of shit from working. They don't allow, or they don't want to allow, right? Wink, wink, nudge, nudge, that they don't want to allow successful things to last very long. So they'll come out with a MetaTrader update. And as soon as you start pulling money from them, that shit will go down faster than you could blink. All right, so this is the kind of stuff we're talking about. This is how you fix this. Okay? All right, so here's a chart. This is the perfect setup. All right, do me a favor. I'm not gonna pause, but I'm gonna be quiet for a second. Take a screenshot. I'll shut up. You hold it and then turn the tape back on. All right, enough. Okay, this is perfect, man. Tell me what you got going on here. Anybody? All right, email it to me. Okay, look, boom, boom. There's that. Hits the 200 EMA, comes down. This breaks below here. This breaks below here. This breaks below here. There's your setups, right? The perfect entry on this is up here, but look at that right there. This is like a gift from the Forex gods. There's your one, there's your two. What happened? Look at that tiny little blue tracer minding its business over there. Price is trading below the previous day's swing low. And when it gets there, you got a measured move vector into the lows right there. Perfect. Man, it's just, if you can't see that, I'm sorry, but now you can see it, right? You know that price is moving lower, right? Think about the book. Think about the book. What's going on? Okay. They break below here, close below, come back. They move out of here. Now, this area is blocked. Liquidity is blocked in the book. All sell volume blocked. They take this area out, they hook it back. This area is blocked. All blocked. Red in the book, blocked. They hit it, right? And there's micro bubbles. They hit it. They break below, and the dealers come back and feed off of this. Now this is blocked. Now look at that. Draw it all the way out here. And look how that lines up going into the next day, man. All right, so if you see this and you decide to go long, that's okay, right? You get your outside vector, flat print consolidation, right? Here's your failed seller's auction, right? This is an FS. Wrote it backwards, sorry. Failed sell side auction. Book takes the break higher. Here's your apex nadery thing. Here's your low swing here. You're looking for a putback somewhere in here. You get this big outside bar. You're going into Asia, it's tough, right? This would be your refined entry. and you get a break, second leg, gone into the highs during Asia. And then this print there would be pushed out into the future, and there's your hook back into here, and you get a near miss. You may or may not gotten filled on that, and there's a little run into the high. There's your 200 bounce trade, right? And then if you shorted off of that, so you had an Asian trade, a London trade, and you might as well wrap it up. You're done. If that ain't enough pips for you, you're too greedy. It's beautiful. This stuff is beautiful, man. You cannot make this up. I get so excited when I look at it. It's amazing. All right. See where we're at in the world. Okay, so this chart was submitted to me, and this is kind of like a walkthrough. This is GU. Tell me what you see. Mark it up. Anybody? All right, I'll start up here, man. So we're going to take this level, stretch it out into the future, right? We're going to take this level, stretch it out into the future. Okay, right? This is the same exact setup I showed you the other day, right? But this does not rotate. Probably time of day, there's the tracer. This doesn't rotate. So if you shorted this off of these double pins up here, you get that push into there, it hits the water. That should be a scratch, and you should end it. All right, it came very late. If you got this one, sold it there, this is a measured move here to here. All right, higher time frame measured move. Okay, look at this. This is perfect. It flipped right on a 50 bounce. Just go through and mark this shit up, man. Just go through and mark this stuff up. Sorry about my drawing ability with this with a mouse, man. Every swing point should be marked. Every time it closes below, you look for the pullback into a level and you sell it. You sell it. You sell it. And you should have sold it. That's the edge wedge right there. That's the wedge off the edge. Pull back. That's a bigger structure M, and that's a minor structure M. And you're looking to sell 2, sell leg 2, sell leg 2, sell leg 2. All the way down, you walk the whole chart. Is it going to play out like that? No, not every time. But the thing is, you gotta trust enough in yourself and your ability that, let's say you get this one, right? And you get this one, that should be enough because you might get some degradation going in here. But if you made enough money and you want to risk 5 or 10 more pips, let's say you hit 230 strikes, right? You hit 30 and 30. You're up 60 pips. If that's not enough for you and you want to take another stab at it, that's fine. If you get stopped on this one, right, it should be -5 or -10 if you're trading right above the edge and you're making good pulls. So you're -10, 60 -10 is +50 for the day. Okay? Can you make a living on that? Sure hope so. You definitely could qualify doing that. All right? Some of these, right, they don't always work out. You get this big outside bar. What's the directional bias? Moving averages, right? Background stuff. I talked about that last week. Background. What's the background? You should be able to just look at the moving averages and know the background. Jim likes the daily. I don't look at it, but listen, it works for him and it's working for other students. You got to find your spot. I don't have a patent on the best way to do it. I just found what works for me and what I was taught, and I've been looking at it for so long that I could tell you this shit blind. That's how you have to be. And you have to have a love for it, man. If you don't deeply love the business and you love money more than you love the business, you're probably in the wrong business. And I'm not trying to run you guys off. I want you here. But the truth is, if you don't have a passion about it, you're in the wrong business, man. Everyone that knows me for the last 20 years that's been around me, I am jacked up like this pretty much 24/7 when I'm trading. I love the way this stuff plays out. And I feel like, I don't know, like that I could see this shit blind. I almost feel like it's the joke's on everybody else. And I don't mean it like to sound arrogant or cocky. It's not what I'm saying. It's like I just can't believe that I could tell you what price is going to do days before it does it, weeks before it does it. And it's some hell of a feeling, man. And I want you to feel that and have that. We own this place. You know what I mean? We own this business. We own this market. Any of them. Put a market in front of me in 5 minutes. I'll tell you what it's going to do. That's powerful. And that's what I want for you guys. I want you to feel that. And this new thing that they did with qualifying, man, I would have killed to have that. I've said it before. I mortgaged my house and credit cards. You know, and I don't know if I needed some pressure like that to not fail. You know, maybe that's the problem. Maybe it's too easy to throw $1,000 and qualify for a $200,000 account, and then people do stupid shit and piss it away. I had a mortgage on my house riding on my back. You know, and at the time, you know, I was married and no kids, but there's a lot of pressure to do the right thing. And now, let me pause for 5 seconds, shut up, and I'll put the chart up. All right, what'd you get? So it's pretty cool, right? Because usually, and I'll be the first one to tell you, this is usually a reversal bar. When you get a big outside structure like that, that's reversal, right? But when you get these reversal bars like this, and then you get a little bit of consolidation to figure out what price is going to do, you do exactly what this dude did. He drew this in like that, right? Now, what did he get? Break lower, hook back, rejection. Okay, if you're unsure on these, you sell the hammer. You get a nice move. Now, draw the lines, right? Price breaks below the line, hooks back. There's a flat print, right? This confirms that the book is still short. You draw a line, right? Price breaks below. This confirms that the book is still short. You got a really nice finger roll up in there, right? Airspace in between. The A frames and V frames, for some reason, seem to really set it up properly. You draw your box. Tops of these bodies aggravate. Yeah, it aggravates you when you don't get it, right? Hooks back. This is one of those that if you moved your stop too soon, right, it hits 3 times. And that might be pair independent, depending on what you're looking at. But this is one of those things that went into consolidation. So I want you to notice something. You had a very aggressive Asian session, a nice drop going into the start of London. You had a lower hit. And then what happens right here? This is where I was talking about. The end of the session, you get consolidation, right? Middle of the session, you get consolidation. You get this move all the way down into here, which starts end of Asia into gap time, and then going through gap time again into the London operator coming on, and he runs the stops lower of people that thought this was a reversal and went long. Then he pulls up and they consolidate. He shifts lower. So he got higher level longs, people going back, and he shifted the zone away from them. They are trapped, right? Then he gives you, so cord of wood, 2 cords of wood. Then he breaks it lower. And then what does he do? He busts everyone's chops and comes back anyway after he ran their stops, right? Block zone, clears it out, pushes up. Here's your apex nadir redrawing, right? Try to refine the entry off that if you can. Still going to have some bleed on that. That's life. All right. And then here's the next spot. Stretch this out into the future. He drew the yellow line, gold line. Perfect. Okay. So what do you got? You got a couple of sell sides into the low. End the day. You come back. You got a larger structure W. Break above the apex nadir with a perfect finger roll A frame. Pulls back. Rehits. Bleeds. Goes back up. Hits the 50. That's it. And then you got sideways print. Okay. Flat print. Maybe you can get something off of here back to like this. That would be the next play. This appears to me to barely have closed above or not closed above this level. So I would probably take a pass. These are the kind of pairs I don't really care for. This is Euro odd, and people like that stuff, and it's okay, man. But what's staring you in the face right now, right, from my drawings? Anybody? Take a stab at it. All right, you ready? There you go. Did you get that? Shoulder, head, shoulder. Right? Shoulder, head, shoulder. GBP crosses, notorious for that. Right? Some of these Euro exotics, they throw it. Okay. GU, EU if you're struggling, nothing else. Take one or both. The problem is master one and then add a second. I'd rather see you take EU, highest volume traded, very smooth, not as whipsawy, not big spikes like that unless it's news. Kind of keeps itself under control because of the volume being traded on it. All right, one more. These were trades that were submitted and very good markups, by the way. So yeah, he's right on this. He drew this out. Problem is, you don't really get anything. This is the possible entry right here. This is what he took. See it? He could have took the nadir right here. It's just not a good entry to me. I love it. I'm glad he did it. But to me, you got this right here. And you don't get that. I like the big frame you like to see, right? This bothers me a little bit. But until this gets back above here, then this becomes validated for a long. Because they broke, they traded, right? But it rejected and came back above. That's important. And then they took out these levels. And to me, I feel like you got to get this. And you don't get it to all the way over here. And it's already moving away. It's one of the natures of these crosses. That's not ideal, but he took a good entry. Then he drew this out here. This is not a bad entry, but you don't get the hook back. That's what I like to see. You don't get a clean hook. You just get a close above and a couple high side rejections. That's a little sus, right? This is a better roll right here. But again, you could take the flip from here. I just don't like the way this pair prints. Right, there's your edge wedge. Right, remember how the wedge works? When you see a wedge, the side that it's going to go to always prints flat because they're bringing it in, they're drawing it in, right? They're drawing it in, and they're trapping higher level longs until this becomes a block zone. Once this is blocked, they just fall out of the wedge. And now they got people that were thinking, oh, for the second leg going up. They never went up there, right? There's his TP. That's a nice trade. So where would your liquidity levels be to try to get something off of here? If you're seeing this as an M, right? You're blocked high, you're blocked low, you're in a shadow box though coming to the end. That's a problem for me. I don't like that session and I don't like the pair. But if you're trading it, there you go. All right. Okay, man, I'm going to wrap it up. I don't want to keep you guys too long. Have a great week. Don't forget, off next week. Send me emails, send me questions, send me charts. Don't be afraid to talk to me. If I shredded anybody too hard tonight, I apologize. But that's my job, man. And I never mention your name, so no one knows it was you. All right, you're good. You're safe. Secret safe with me. Send me some shit. Appreciate you guys. Have a great night. Have a great week off.